Welcome to the Predictable B2B Success Podcast, brought to you by Sproutwood.com. I'm Vinay Koshy, and our guest is Tim Calise. Tim, you are a versatile entrepreneur, finance expert, and a podcast host yourself. Founded successful tech fitness ventures, raised $325 million for your first hedge fund by age 25. Co-developed Alan, which is an AI-driven SaaS platform, achieving remarkable growth from 0 to 20 million in ARR in 6 months. Currently, you're the co-creator with multiple 7- and 8-figure service business owners, aligning product, pricing, and positioning to install profitable acquisition systems. That's quite the resume. Tim, I'm curious, when did you first know that you wanted to be an entrepreneur or a business consultant?
Yeah, and Vinay, great to have you. So thankful to be on the show, and hello to everyone who's listening. I think for me, I fall into that category, Vinay, of the inquisitive child who, from a very early age, I'll use the word tormented his parents because I always wanted to know how things worked. And in retrospect, I believe part of that was rooted in I wanted to understand that first level, that first order thinking, breaking things down, because I always felt like I wanted to recreate them to probably suit some desire that I had. And so I think my kind of entrepreneurial spirit really started at an early age. And I think I also had the great fortune, my father was in professional services. And so I watched him do the traditional get on the train in the morning, wear a suit, carry a briefcase, things like that. And as many young sons do, they emulate what they see. And so I replicated a lot of those behaviors, probably to the great dismay of my two sisters.
Certainly. And given what you're doing more recently, why go into business consulting and co-create with other founders and business owners?
Yeah. So when I grew up, so I'm in my early 40s now. I believed for a very long time, and this might resonate if you're listening for you, I believe that the success meant withstanding kind of pressure, almost like a gladiator. He who can absorb the most amount of torment and pain will win. And quite frankly, my wiring was always different. I didn't want to go into business from a Herculean perspective. Let's go into the Coliseum and only one of us will walk out alive kind of idea. I love the creative piece to it. So I have an empathetic kind of element of my wiring. And so after I started a couple of companies in college, I was very fortunate to be able to be in the right place at the right time and raise a fairly large amount of capital earlier in my career. And then I deployed that capital myself. And I realized after 20 years of doing this that my empath piece of me says, if there's a way for me to help others, steward others, or guide others through this jungle of what is founding and growing a business, I felt called to do that. And then the second thing, which was really important kind of in the most recent years, is I realized for myself that I get the best out of me when I'm in a community and in a group. So in the beginning of my consulting, I did one-on-one talk to camera. But quite frankly, I was really lonely and I was not actually flexing those creative muscles that were really important to me in the early days. So I call it co-creation because I believe that kind of myself and an entrepreneur together, it's the 1 + 1 = 5 kind of analogy. And that's where I found a lot of success and quite frankly, a lot of energy in the last couple of years.
That's interesting, simply because in the many conversations I've had and a bit of research, I found businesses really struggle, especially B2B brands struggle to align profit and business exit strategies for a few reasons, at least. One of which, from research, shows that only 30% of business owners have a formal succession plan in place. Another being that B2B brands often struggle to create systems and processes that can operate independently of the founder, making the business quite less attractive to potential buyers. And of course, companies frequently underestimate the value of their intellectual property, customer relationships, brand reputation, which can severely impact exit valuations. The yo-yo kind of trajectory that some businesses go through in terms of not being able to demonstrate a predictable growth trajectory, again, impacts them. And perhaps final point here, many businesses struggle to effectively manage the 5 core functions, which I would label as lead generation, lead nurturing, sales conversion, product delivery, and customer retention. Now, I believe you have a product to profit framework, which I'd love to dive into in a bit. But I'm also curious, given your journey to date, what would you say is your personal area of strength?
Yeah, and something you just said resonated with me, and if I can touch
Sure.
on it for just a second, which is starting and growing a business as is an investment, right? It's an investment of time, capital, intellectual curiosity, the energy, et cetera, right? So anytime we make an investment, we are trading or evaluating upside versus downside, call it payoff versus risk. And so I think one of the challenges that I see, if anybody, and I know I felt this, if you feel stuck or I feel frozen, like I'm not making progress, that stuck feeling comes from a lack of confidence. And in my opinion, a lack of confidence comes from a lack of clarity. So if I said, Vinay, if you knew exactly who would buy your business at some time in the future, if you knew exactly what criteria they would be looking at to evaluate your business, if you knew exactly what weightings they would put on those criteria, do you feel you would have a clearer sense of what thing you are trying to build? And I think you would argue that, yes, if I knew all of those things, I would have clarity about at least the destination or the path that I would be headed. So that is exactly what I do. As an investor with an investor background, when I'm working with clients, I actually or metaphorically, depending on the situation, take the company to market. And I would say, Vinny, based on what I know about you, where you are right now, and you want to exit in a couple of years, let's go find a buyer. Let's go find a likely buyer, a strategic or a financial buyer, and let's actually have them evaluate the business. And they're going to come back and I'm going to say, we thought we could sell for 10 million. They offered us 3. Why? They came back and said, you're in the center of everything. If you step out, the business crumbles. You have no processes. You have concentration of revenue inside of one client. You don't have recurring revenue. So every month you start flat footed. These are all risks that we as the buyer will take. If you can reduce my risk, I will increase the price that I pay. So all we do is reverse engineer the process. And I think so often we start with the beginning in mind instead of the end in mind. And so my process is simply to meld this kind of strategic operator side of me, where I've deployed millions of my own dollars into investments and startups, with this institutional M&A kind of mergers and acquisitions side of me, which is, what is the investor lens on the business? And so we never wonder, are we building the right thing? And just to put it in very simple terms, some businesses and some market climates, revenue matters more. Look at Facebook in the early days, losing tons of money. Amazon lost tons of money on paper for years, yet was worth hundreds of billions of dollars. Why? Because growth mattered more than profitability. They could tap capital markets to continue to fund the losses. There are some businesses where the business is evaluated on EBITDA or income. If you don't know which one your business is going to be evaluated by an investor, how do you make strategic decisions? And so we basically just reverse engineer the process, fill in the holes, and then we'll go back to market again until we get the outcome that we want, so that we, and I hope my clients will never fall into the 90% of businesses under 5 million a year in revenue that don't sell for anything close to what they believe they should be worth.
Brilliant. Well, lots to unpack there. I would just go back to the question I asked you before, which is, what would you say is your personal area of strength?
Yeah, so I think this Venn diagram of having the investor mindset and the investor clarity, I understand that process, with actually being boots in the ground, in the trenches, building product. And in my opinion, for most of the businesses I work with, which are typically 5 million in revenue or below, typically 500K to 5 million, the one thing that matters more than anything above all else is what the product stack looks like. And if I can get that right, and I add in some kind of recurring revenue component in some or in part, then I know what an investor will look at that business and evaluate and things like that. And then I use my network to bring those folks in, and I can call people and say, are you interested in buying a business like this? I actually had a conversation via Instagram DM this morning with someone in my network, and he's looking to raise $10 million for his business. And he hired an M&A group. And I said, I've got 3 people who would buy the business tomorrow. Do you want an introduction? So I look at the assets that I have, which is experience and network.
So if I'm hearing you correctly, and please correct me if I'm wrong here, the issue would be that most businesses think that wealth is created perhaps at the beginning and potentially increases towards their exit, whereas you're of the opinion that wealth is primarily created at the exit. Would I be right?
No, I would say the majority of business owners will invest in a business. They will continue to try to grow it. They will quote unquote reinvest in the business for a period of time, which is why it's not cash
Yeah.
flowing. And in my opinion, I did this just so you know, and I was lying to myself. I called it reinvesting in the business, which was a way for me to not realize I was running an inefficient business. And then at the end, when somebody says, I'm either sick and tired of running this business, I've lost all my emotional capital, I just don't want to do it anymore, I'm exhausted, my family is wondering when the payoff is going to come, that is when they typically then say, I want to sell. And that is the worst time to sell. So instead, we say, let's get clarity around what we're building with already knowing who could be a likely buyer of the business. And then we're just driving everything towards that. So there's no question. And then I come in and I work on operational efficiency and typically
Sure.
product stack and pricing, because product plus pricing yields the positioning in the marketplace for your goods.
I'd also be curious, given that perhaps there is a degree of mental and emotional exhaustion on the part of the business owner or founder, is it enough for for you to kind of shine a light on a potential exit and the approach that they could take? Or is there a bit more required in order to make the heart shift that's also required to kind of sustain them for the next leg of the journey?
Yeah. Yeah, so I think there's two pieces to that, Vinay, which are important to recognize. I actually just reread 10x is easier than 2x for probably the third or fourth time. And in the beginning, for those that have read the book or haven't read the book, they talk about how the statue of Hercules was created, or even the statue of David. And Michelangelo said some version thereof, or some version of, I just looked at the block of marble and I removed everything that wasn't Michelangelo or wasn't David. That's the kind of and the reference is, I think most businesses have the great ability to be what is intended, but many times they've lost track of their core value proposition. And so we actually have to take away the things that aren't working. It's the 80-20 rule, Pareto's law. So first we find what's the 20%, what's actually driving value. Because the thing that's emotionally exhausting is I feel like I'm running in a bunch of different directions. I don't know if I'm making any progress, and I'm not quite sure I know exactly what I'm doing. It's the reality. But if I can say, hey, a buyer will, if you take this 20% of your customer base, which are driving all the value, and if the entire business was made up of those people, the business would be performing, it would create cash each month, which takes the pressure off, allows you to build the team, allows you to feel like it's worthwhile, your investments are getting paid off. And you'll have a business that doesn't revolve around you, which gives you time freedom. So the three freedoms are time freedom, financial freedom, and mental freedom. And the only way to do that is to build a cash flowing business while we know exactly what it is.
Very interesting. And I think I had a couple of conversations over the last 2 days where business owners who they're having business coming in at this present time. They're very good at what they do, but they're in a very competitive space. Said to me when I asked them that they weren't clear on their actual value proposition of how they differentiate themselves from the rest of the competition. And I thought that was very interesting. And I'm curious, what would your advice be to them, given that they were operating, they've got teams under them, but haven't really been able to distinguish themselves from the competition?
Yeah. So there's a concept of kind of creating a market of one. And what that means is, and it's also reflected in the book, Blue Ocean Strategy. If you haven't read that, it's a great book. And the concept is effectively to move away from the red ocean of competition and move to the blue ocean of opportunity. So you say, how do I do that? The easiest answer and the most common answer is some version of niching down, which is instead of trying to be something for everyone, you become a niche player inside of a market, and that allows you to differentiate. The easy example would be a photographer. If you are hiring a photographer for your wedding, you can find a photographer who's a generalist or you can find a photographer who specializes in weddings. Which one are you more likely to hire? So just the specialization is one way to differentiate. The other way to do this, which is what I do, and especially in this age of AI, I would personally go to ChatGPT or some version of some GPT bot platform and say, this is what I'm really good at. This is what I do right now. Here are my favorite customers that I work with. Tell me, give me 10 sub niches that I could focus on that align with all of these things. And you'll start, because what you're really trying to do is just to tease out the thing that actually you're differentiated. You are your zone of genius. What is the thing you're better at than anybody else? And that is the line you'll know when you have it, when you say, I can be in the best in the world at this. I can't do everything, but I can be best in the world at this. Once you know what that is, then you build a team around you to supplement the things that are outside of your zone of genius.
Yeah.
So it's a reduction process and a concentration process. And again, the way to do that is find the clients that pay you the most, that you enjoy the most, that stick with you most. There's probably something inside of that group that is different from everybody.
And thank you for sharing that approach. I'm also interested in hearing your approach as you help entrepreneurs balance this idea of pursuing profitability with the goal of maximizing your exit opportunity.
Yeah. One of the things that we talk about is building a profitable acquisition system, which is a very long way of saying, how can we turn the perceived expense or investment of acquiring customers into a profit center? So very simply, if you know that you can generate a lead for $50, and if you know that you can convert, basic math, one out of every two leads into paying you something, that means that the cost to acquire a paying customer at that point is $100. So the question you should ask yourself, and let's just say you run a $10,000 high ticket program, the question you should ask yourself is, what needs to be true, or what can I create that I can sell that person that I acquire for $100? What can I sell them that's worth $200 or more that they will say yes to? So one of the things that we do differently is we build in gradual steps along the way. So I use the word customer specifically because I define a customer as someone who has paid you money one time, and a client is someone who has paid you money on a recurring basis. We earn to acquire the customer, and then we sell to them again. We retain them to then become a secondary and tertiary buyer. And then we hold them, they know and trust us. We keep them for the long term. So I think the one thing that we miss a lot of times is we're in the free giveaway economy right now, lead magnets, etc. I actually think buyers buy. And so what is the thing that we can sell them, which kind of gets them into our world at a profit?
Let me see if I can unpack that a little bit. Are you suggesting that we, instead of giving a lead magnet or a freebie, so to speak, that we give them almost like a pilot version of a program, or like a simplified one-time test offer, which certainly speaks to their desires of solving a particular problem, but is still profitable for us?
Ideally, yes. And the way you align it is, let's just say there are 7 steps between the problem that somebody has and the solution that they want. I have an 11-year-old son. He loves to play with Legos. Think of them as Lego bricks. Sell them the first Lego brick and then say, but if you like this, you're going to love my done with you program. And that comes from a position of, I think free lead magnets these days are underwhelming at worst, or at best, and actually quite disingenuous at worst, because what happens is companies that create them as a one-off, like as the name implies, a lead magnet, but it doesn't reflect the things that they're actually good at. They don't give a lot of value, and therefore I'd rather have the person have great value but pay a little bit in the beginning than pay nothing and misunderstand the value that we could potentially bring. I think we turn people off more than we actually help ourselves.
Okay, that makes sense. Is there minimum profit margin that you're looking at as you structure these deals, or do you build that into your main offering?
We try to get a 2-to-1 return on ad spend at a minimum. And then we get a 2-to-1 return on gross margin of delivery as a secondary. So first is just purely, as I mentioned before, acquire a client for $100, sell them something which has very low cost for $200. If there's some delivery costs in there, just get it to 2x profit on that product as quickly as possible, and then expand.
Okay, that makes sense. Perhaps it'd be a good time to unpack your product to profit framework, and then we could perhaps dive into that a bit more in detail.
Yeah, some of the first part of that is what I just
Sure.
walked through, which is, and let's go one step further back. If you don't know very clearly who your avatar is, who your perfect buyer is, that's a first step.
Okay.
And I think over time, entrepreneurs in general will start to broaden the types of people that they want to serve, and actually in many cases are actually doing themselves a disservice, because you're moving further and further arguably away from the kind of the perfect match. That's the first. And the reason why that is important is because so often we treat all leads the same. But we know that one size fits all solutions don't work over the long term. So if you know who your core client is in their profile, and if there's more than one, that's okay, but don't treat all leads and all customers the same way. And so we actually walk through, I have a resource that I'm happy to provide to your listeners, which actually aligns all of these things together, which is how do we align the person with the problem, the solution, and those steps along the way, so that we're not giving them something that is not valuable to them. So that's the first alignment. As part of that's where those kind of the profitable pipeline component comes in, because we can test different offers to different avatars. So we actually know what resonates for them as to your point, a trial test or a litmus test in the beginning. And then that actually informs the back-end product that we can create, because we know what they're reacting to. So we align the front-end acquisition at a profit, then which turns this cash drain of acquisition into actually a cash flow generator, which helps us on the front end. And then the back end is how do we align kind of those next steps to continue to deliver upon the promise that we made in the beginning.
So,
it's not complicated, but it's not easy. And to get it right, it's that flywheel analogy where if you get it right, you're acquiring customers for a profit on the front end, and then the more aligned they are, the more they pay, the longer they stay, and therefore you're now on the virtuous cycle of recurring revenue on the back.
Are you actually mapping this out financially speaking for business owners and founders, so that it's not just a process, but almost like a financial roadmap to their potential exit?
Absolutely. And on the back end, just to give a little more insight into that, we generally run a 3-tier pricing system, which means we generally have 3 options for each avatar to buy. So I'll say that again. So think of it as it could be something as simple as a do-it-yourself, done with you, done for you tier. The do-it-yourself might be $100 a month, to use round numbers. The done with you might be $500 a month, and the done for you might be $5,000 a month. You need to have tiers because the types of people you're attracting, they all want something different from you. I have someone who I'm actually become very close with, who said something about a year ago, which has stuck with me. And she said, every time I go to a conference, I buy the VIP ticket. I don't even look what's included. I identify as the VIP buyer. The numbers show quantitatively that somewhere between 5 and 10% of all of your customers are willing to spend 10 times more than you're charging them right now if you don't have a high ticket offer for them. I'll say that again. 5 to 10% of your customers are willing to, and are desiring to spend more money with you, but you have not given them an avenue and a path to do that. That is where all your profit lies. And if you don't do that or don't acknowledge that, you're leaving a lot of the profit on the table. and you're actually making things much harder on yourself than it needs.
Very interesting. Are you also mapping this roadmap with daily operations?
So most of the companies I work with have existing
Mm-hmm.
team. So I work at the KPI level. So we map this out and say, what does the journey
Mm-hmm.
look like from problem to promise? And then retention on the back end. What are the key milestones along the way that are important to us to make sure that we're
Mm-hmm.
hitting those? And then how do we know if we're right? And then we just build feedback loops at each one of those key junctures. And then they train the team going down. I look at the dashboard level so I know where the holes are. And then I can say, hey, conversion rates are low here. Why don't we tweak it this way? Things like
Mm-hmm.
that. So I'm at the consultative level. I don't train the teams. I'm not hands-on in that
Sure.
regard, but I can tell where things are generally going right and when there's just areas of improvement.
You've certainly brought a lot of clarity from what I'm hearing of your process to founders. Are there other issues that you come across that causes not just confusion, but perhaps are blind spots for these folk? And if so, how do you make them aware of it?
I try to, so I am more of a consultant than I am a
Mm-hmm.
coach. And those words get interchanged, and I think they actually have very specific definitions. My particular skill set right now is on the tactical side of the world. There are great people who are able to coach,
Okay.
meaning they affect change in the
Mm-hmm.
founder, psychology, belief systems, traits, things along those lines. I view myself more as a high level executor
Mm-hmm.
currently. I seek over time to certainly evolve more into a coaching role, but I think I'm more of a, I understand what needs to be done. And so I focus more on the tactical side. So acknowledging that it's usually more financial, quantitative, balance sheet work. I look at it again from an investor's perspective. And so I bring the lens of, I personally believe that entrepreneurs would be 10 times happier if they had the option to sell when and if they want
Mm-hmm.
to. And so we just prepare for that. And then they retain the option. They don't have to sell, but at least they have an idea of what is required. And by the time somebody's exhausted and wants to sell, it's in general too late to actually then say, this is going to be an 18-month period of time where you're going to do a lot of work and hopefully it pays off. I'd rather do it when we can actually affect a change in the business earlier on in the process.
I'm hearing that the empath wiring in you certainly desires to bring process and systems and a bit of audit to a business. I'm curious though, people are emotional beings. How do you help them overcome not just their fears, but just going back to what you said earlier about transformations do not happen in isolation. How do you combine that with your vetted processes and systems?
Yeah. Yeah, I think belief is one of those, as I mentioned earlier, it's really a crisis of
Mhm.
confidence. And I think each of us have, and I believe transformations don't happen in isolation simply because having an outsider's view, like if I told you my business
Mhm.
right now, Vinay, there's something you would be able to see that is a blind spot for me because I just don't see it. That's why they call it a
Mhm.
blind spot. So I do two things. One is identify the blind spots, which are easy for me
Mhm.
to see, generally speaking. There are some kind of things that just through repetition and experience I can see. So that's the first. The second is from the empath perspective is once we identify those holes and we provide a process, that increases the level of
Mhm.
clarity that the business owner and entrepreneur has. The more clarity they have, then allows me to then lend them my confidence in where they're going, which gives them the energy. So I can give them the route and then I fill their gas tank to say, now you know where you're going. You're not hanging a left and hanging a
Mhm.
right randomly. You know where you want to go. I know you can get there and I'm going to help you get there. So that increases everyone's level of output because the inputs
Mhm.
improve. So you get that flywheel spinning. They're more excited. They're more energetic. The more energy they have, the better the team goes. The better the team does, the more the customers stay and have a great experience. The more they do, the more they buy. We have to get on that virtuous cycle of positive
Mhm.
momentum. And I think so often I talk to folks who the reality is, and this is for all of us, entrepreneurship is a really lonely endeavor.
Absolutely.
And I think it's really tough to like when you feel like you don't have perspective and you're going it alone, it's hard to it's is it possible?
Mhm.
Absolutely. Is it probable that you can see that through? It's just I'd rather stack the deck in my favor. And that's what I have the great fortune of being able to lend my confidence in to them during those times of unshaken or shaken belief.
Would you say that in most instances, having a trusted advisor like yourself and a supportive team is enough, or should they look at having a bit more of a independent board of advisors who could speak into not just the business side of things, but perhaps even the life of a founder or entrepreneur?
Yeah, so I'm a big believer in mentors and having people be able to bring specific value and insights in certain areas. I'm also a part of kind of a couple of groups. One in particular meets every Wednesday. My family knows that every Wednesday at a certain time, I jump on a call for an hour, and it is refreshing for me because I get to hear the perspectives of
Mhm.
others. That is not a one-on-one, a one-to-one, it's a one-to-many relationship, but I rely on those folks greatly when I'm wondering about an area of the business which I'm looking for insights into. That's the first part of the answer. The second is, and I've alluded to this and said it in a couple of ways, I believe we each individually take on far too many things that we are not qualified nor energetically
Mhm.
aligned on. And that is why we start to hate the business. I don't like the one of those five core functions you're probably best
Mhm.
at. I love acquisition. If I did anything, I would sit and run funnels all day long. Great. You should do that and find someone else to do the
Mhm.
rest. But what happens is we all become pulled into this generalist, wear many hats kind of position. And the reality is 90% of what you do, you actually are not the most skilled person at doing. And therefore, my personal belief is you need a mentor to help see those things in you. And then you need someone to keep you accountable to actually go and take action on it. And that's when you get to the 10x
Mhm.
level rather than feeling like you're standing in quicksand.
A couple of questions come to mind. The first of which is I would refer to it as the hustle and grind culture. How do you help them find a bit more of a balanced approach to this whole idea of business growth when they're perhaps used to accepting that I have no choice but to stick with the hustle and grind kind of culture?
Yeah. So two things here. So one is hustle and grind from the standpoint of grinding through things that you are not skilled or bring you
Mhm.
energy is a short-term game that you will lose. So think of that as broad, heavy
Mhm.
lifting, almost the pushing the rock up the hill analogy, right? That I counsel people to move away from, and I can talk about how we do that. The second is speed of staying in your lane. I advocate them to increase the
Mhm.
frequency of what it is they're doing because it's an iterative process. So we narrow their focus and we speed up the number of iterations through what it is that they're actually good at. Now, the question is that sounds great, Tim, in theory, but how the heck do I actually do it? That is why we have to start to build cash flow through the
Mhm.
business. So you might have to grind it out for another 30 days. But once we start to generate some cash flow, I'm going to start removing you from some of these other areas. We're going to find people to fill in. Not to mention, if they're in their zone of genius, it's not just a reduction of frustration for you. It's actually you're adding a layer of leverage for the
Mhm.
business. It's like a double win. And then we just go through each part and start pulling you out and installing other people. And as we do that, the flywheel, meaning the business flywheel, spins faster, more cash can be reinvested. And then we start taking some chips off the table because I do
Mhm.
believe for most entrepreneurs, whether they sell or not, you should be taking money out of the business. And
Mhm.
that is a little bit of a different strategy than many people employ.
Absolutely. With this approach that you're taking, I'm curious. Let's say you're generating cash flow, the person is not enthused by acquisition and is focused on another aspect of the business, a particular outcome that he or she wishes to achieve in a period of time. Let's say acquisition starts to suffer. Maybe there's economic changes, etc. It's showing up on your dashboard as something that you should be paying attention to. What would your recommendation be to such a person about addressing the acquisition, which is important, I would say, for most businesses, while not breaking away from this new mindset of focusing in on your strengths?
Okay, great question. I want to differentiate between
Mhm.
offers and product. Those are different things. Product is the core packaging of your services, goods or services. Those are generally like bigger rocks, but you can create derivatives of those. So you can create a lighter program. You can create, if it's one-to-one versus one-to-many, if it's done with you versus done for you. There are versions, if you will, of a core product. My general belief is and again, I work with existing businesses, so they have some version of product market fit, meaning that product at one point in time, hopefully today, and hopefully into the future, matches the desire of a prospect. So as long as we believe those things to be true, the question though is through time, how people respond to acquisition changes greatly. And right now, and that could be just a difference between, are we in a fearful economy or are we in a fruitful economy? Do people feel like I was around in 2008 when 2006, beginning of 2007 until the spring, there were people saying that the stock market will never go down and the real estate market will never go down. It was pure euphoria. Fast forward to other points in time where the fear meters are off the charts. That matters a lot because it affects the psychology of your prospect. You have to change your offer to match the psychology and the desires and the fearfulness or joy of your customer at all times. So offers are rotated. I'll call them micro products can be rotated, which is just the difference between like can you get that customer. The client product generally stays virtually the same with small iterations along the way. So the closer you get to acquisition in the process, the more iterative we are because we have to continue to match and find out the optimal way to talk to our ideal client. But what we actually deliver upon, which is a reflection of who we are, our value proposition to the world, generally stays a little bit more static with some iterations across time. Hopefully that is clear, and happy to refine it as
sure.
as
I was just going to say that. Could you give us perhaps an example or two of perhaps a couple of businesses that you worked with where you've had to iterate on the micro offers given a different changing macro situations?
Yeah. If we go back even 3 or 4 years ago, call it the rise of Instagram and others, you could say just about anything and get a client. For anyone who's in the marketplace today, that is not the case anymore.
Yep.
Buyers have become increasingly discerning about offers and about claims and things like that. The FTC has really clamped down on these issues in the last 12 to 24 months. So I believe that making an offer which is rooted in a demonstration or documentation rather than a claim works better in today's market. So what does that mean? That means instead of saying, Vinay, I understand the problem you have, download this lead magnet or something like that, or even trust me, when you get behind the paywall, I have all the answers for you. For those that were not around 4 years ago, that actually worked at that moment. Today, it does not. So today I would say, Vinay, if you have this problem, using the word if calls out the client to say, if I identify with what you're about to say, if you are a person like this, and you have this problem, and you desire this solution without this thorny thing that you're used to doing, I'm running a 30-minute workshop next Tuesday where I'm going to walk you through exactly how to go from where you are right now to the thing you desire. Let me show you what that looks like. So that's like a live version of a micro product. At the end of that workshop, 30 minutes, 45 minutes, or what have you, you've probably understood who I am and how I think and whether you like me or not. And then I could say, hey, Vinay, if you liked this, we both know that business is a long game. We've only moved one lever. There are 9 other levers we have to think about. So if you liked this, you're going to love my 10-lever system. So let's get going. And you'll go, oh my gosh, this is great. But I've earned your right to ask you instead of advertising my 10-lever system and trust me, it works. Do you see the difference? It's not small. I believe that we should be doing, for those that can genuinely deliver value, we should be doing a lot more live events, lots more workshops, lots more things like that to draw people in. And you could pay, you charge
Mm.
for it. We charge between $97 and $297 on average for those workshops.
And would you say that doing that, especially given where we're at economically and technologically speaking, for service-based businesses that you work with, is, I guess, the key driver of revenue growth?
Say the
Sure.
question
For
again.
putting out these micro offers too and workshops, as you put it, are they the key
Yeah.
drivers of revenue growth at this point in time for yourself and the businesses that you work for? Because even as a business consultant, you operate in a very competitive space. I'd be keen to understand how it is that you're able to not just get attention, but also drive revenue growth.
Yeah, great question. I personally, going into Q4, have a plan to execute exactly what I
Mhm.
just said in a live environment because, as you mentioned, Vinay, you're absolutely right. The business consulting, generally speaking, that space in general is, number one, super competitive because there's no barrier to entry. Anyone can say they know anything. But I believe I am going to compete on no one else will demonstrate their proficiency more frequently than I will. And so that's what I'm leaning into. I believe that by doing so, I will earn the right to engage with people who view that what I can do can be helpful for them. That's the front end. And I believe by doing that, I can charge more and I can do things a little bit differently. Now, that being said, the majority of my business today is actually equity driven, not cash
Mhm.
driven. And I believe that is a critical thing in the consulting space. And I'll tell you why this
Mhm.
matters to everybody listening in a moment. I generally align myself with business owners and I don't take cash compensation. I don't get paid by the hour. We agree to split either the revenue or the valuation of the business or both above and beyond where it is when I come in.
Mhm.
So if I work for a year and I don't improve your cash flow or your business value, I don't get
Mhm.
paid. To say that another way, and I've learned this now a few times, I want to move myself closer to the value creation, closer to the revenue. And I personally believe that will cause me to be differentiated from
Mhm.
everyone else because everybody else just wants to get paid regardless of the outcome. If I can tie myself to the outcome, I believe I win. We built Allen, which was a
Mhm.
business that you had mentioned in the intro, to $20 million a year in annual recurring revenue in less than 6 months, purely because we were able to get marketing agencies closer to the value that they actually deliver and make it almost foolproof for them to deliver more value than they did before.
Mhm.
So all we said was, if you can make twice as much per client, give us a piece of
Mhm.
that. Everything else you make right now is yours.
That makes a lot of sense. It certainly distinguishes you from most of the others in the marketplace. What are you doing to get people into a conversation, to even get into things like micro offers? Are you just using various channels to perhaps showcase snippets of what you do and results you've obtained, or is there more to the ecosystem?
Yeah, for me, I have been able to grow to where I am right now purely from referral and from my network. And this year, starting about 60 days ago, I pushed very strategically into building more personal brand. And so anyone who goes to my Instagram will see starting kind of September 1st, you saw a very different set of posts and things like that. I did 3 hours of presenting at an event last month, and I'm anyone who I work with, you're going to see like bits and pieces of that being demonstrated out to the marketplace. Um, and then offers come after that. So for
Right.
me, it is highlight what I do and give people a little taste of that. Next is to just be able to have a chance to engage and nurture those relationships. And then on the back end of that is different offers. And primarily for me, it's going to be virtual and live events, workshops, and others going forward. I
Okay.
think they can't be, you can't manufacture through an AI
Mhm.
bot a live event. And I think AI is great. It has a lot of benefits. We can use it as an input to the process. But I think there are businesses out there that right now are effectively veiled AI shops, and they're trying to get ahead of what is coming, which is, in my opinion, going to be a regression to the mean. So if you can actually do better than that, you need to figure out ways to demonstrate your proficiency that isn't easily replicated.
Brilliant. We've covered a fair bit of ground, but with this idea of aligning profit and your exit strategy for growth, business growth, are there perhaps a couple of areas that you find doesn't get talked about very much? If so, what would they be?
I think the 3-tier pricing system that we run is valuable for just about
Mm-hmm.
everyone. I personally believe in relationship-based business. I don't resonate at all with an online marketer who's just been able to wordsmith ways to get people to
Mm-hmm.
to get their credit card out to sell them something one time. I don't look down on it or knock it in any way. It's just not where I've chosen to spend my time. I believe in recurring revenue. And so I have spent a lot of time working with a number of businesses and a number of industries in building that as a defensive mechanism. And an example of that is I have an HVAC company that I'm aware of who I did a little bit of work with. I can't take full credit, but they have 2,000 customers paying $50 a month on basically a membership
Mm-hmm.
subscription. And what they get is they get 10% off a annual service, they get basically expedited service, and they get first call 24/7. You can do some math. That is a business that, generally speaking, will only get called out once a year on
Mm-hmm.
average, is now getting revenue each and every month. That business is infinitely more valuable to a buyer than trying to forecast demand of HVAC and
Mm-hmm.
services in a specific market. So if you don't have a recurring revenue component, my personal opinion is investors are going to look more and more for that because it gives them a viewpoint into the future.
Mm-hmm.
And so I think it's critical going forward. And then the last, I think, the last piece, I think, is we're coming off of a run where it was really quite easy to acquire interest. We're in the interest economy. I think it's going to get a heck of a lot harder going forward. You're already seeing it. LinkedIn is now flooded with AI chat GPT posts. Standing out from outside of the noise is going to get increasingly more difficult. And if you don't have a plan for that, I think it's going to get very tough in the next couple of years.
Thank you for sharing that. Just to wrap things up, Tim, if you were listening to this episode, what would you say would be your top takeaway?
So selfishly, I have a framework that I'd love to give you, which will help walk through some of the things that I mentioned. There's two. There's a business audit, which will give you alignment across everything. The other is if you want to grow or introduce recurring revenue, we have a method to do that. So I'll give you a way to get those as a listener. I think creating a market of one and leaning into your individual zone of genius is probably the most important thing anybody can do. You can do anything, you just can't do everything.
Mm-hmm.
And getting clarity on exactly where you should be playing, that stacks the deck in your favor. If you don't know what that is, that was probably the most important thing for you to do today.
And where could we get those resources?
Yeah. Yeah, you can go to timcalise.com. Actually, go to tim.calise on Instagram and DM me Vinay, Vinay, and I will send, and just tell me which one of those or both you, and we will send those over to you. Go to Instagram, tim.calise, that's TIM.CALISE, and DM me the word Vinay, and we will send those over.
We'll include that in the show notes. Is it LinkedIn would be the best place to connect with you on social media as well, apart from Instagram?
Yeah, I'm on Instagram, LinkedIn, and websites timcalise.com, but Instagram and LinkedIn are where I spend most of my time.
Terrific. Tim, this has been brilliant. Thank you so much for doing this.
Thank you for having me on.
No
Appreciate
worries.
it.